Follow $1 through the AI boom. Nvidia invests it in OpenAI. OpenAI spends it renting data centers from Oracle and CoreWeave. They spend it buying chips from Nvidia. The same dollar has now traveled in a circle and been counted as revenue at nearly every stop. This is the financial engine behind the biggest technology boom in history. A web of deals worth over $1 trillion, in which the sellers fund the buyers who fund the sellers. Supporters call it a virtuous circle. Critics call it the most dangerous illusion in modern finance. Today we follow the money and ask which one it really is. Start with the scale. In 2025 alone, OpenAI, a company most people know as the maker of ChatGPT, committed to roughly $1.15 trillion in infrastructure spending through 2035. Not revenue, spending. It's spread across 7 suppliers, $350 billion to Broadcom, $300 billion to Oracle, $250 billion to Microsoft, $100 billion tied to Nvidia, $90 billion to AMD, $38 billion to Amazon, and $22 billion to CoreWeave. For a company with around $13 billion of annual revenue, these are not normal numbers. They are numbers that only make sense if you assume the future arrives exactly on schedule. Now the strange part. Many of those suppliers are also OpenAI's investors. Nvidia agreed to put up to $100 billion into OpenAI, later trimmed to a $30 billion equity stake, while OpenAI committed to buying millions of Nvidia chips. AMD went further. It handed OpenAI warrants for up to 10% of AMD's own stock, in exchange for OpenAI deploying $90 billion of AMD hardware. Nvidia also took a 7% stake in CoreWeave, then agreed to buy back over $6 billion of CoreWeave's unused capacity. The seller is funding the buyer, and the buyer is buying from the seller. Here's why that pattern makes analysts nervous. In a normal market, a sale means an outside customer chose to pay you. In a circular deal, an upstream company buys equity in a downstream company, which then uses that same cash to buy the upstream company's product. The money leaves and comes back. But along the way, it can be booked as an investment, as capacity, and as revenue. $1 real of demand can appear on paper as $2 or $3 of growth. That's the accusation. Not fraud exactly, but a system that can inflate how much genuine demand actually exists. It isn't only equity flowing in the circle. A lot of it is debt. Oracle is raising tens of billions to build data centers it has already promised to OpenAI. Stargate, the flagship project with Oracle and SoftBank, carries a price tag around $500 billion and nearly 7 gigawatts of planned capacity. A new class of companies, the neoclouds, CoreWeave, Crusoe, and others, are borrowing billions through convertible notes and off-balance sheet vehicles to buy the GPUs they then rent out. When demand is strong, leverage multiplies the winnings. When it isn't, it multiplies the losses. Everything in this loop ultimately depends on one company's ability to pay. OpenAI's revenue in 2025 was around $13 billion. Real, fast-growing, but tiny next to its commitments. In the first half of that year, it burned through about $2.5 billion in cash. Its own chief executive says the company expects to invest trillions in physical infrastructure. So the math is stark. Roughly $13 billion of revenue standing behind more than $1 trillion of promises. The bet is that revenue catches up before the bills come due. How big is the bet? The consulting firm Bain and Company tried to size it. To pay for all the data centers the industry is planning to build by 2030, Bain estimates AI companies will need about $2 trillion in annual revenue. Their projection of what the industry will actually earn falls roughly $800 billion short. $800 billion, a gap larger than the entire annual revenue of almost any company on Earth. That gap has to be closed by 3 things: faster revenue, more borrowing, or disappointment. The danger of a circle is that everyone is downstream of everyone else. Picture the chain. If Microsoft's AI products underdeliver, it spends less on its cloud. That means fewer Nvidia chips. That dents CoreWeave, whose value is tied to renting them. which shakes confidence in OpenAI's funding, which loops right back to Microsoft. Already, the combined free cash flow of Amazon, Google, Meta, and Microsoft is forecast to shrink by more than 40% as they pour money into AI. In a tightly linked system, one weak quarter doesn't stay contained. It travels. But there's a serious case that all of this is rational, even healthy. The best AI chips are genuinely scarce. In that kind of market, you don't just place an order. You lock in supply by pairing long-term purchases with financing. Investors like Janice Henderson describe the web of deals not as a trap, but as a virtuous circle. Capital lining up the suppliers, builders, and customers needed to meet demand that is, by every measure, exploding. ChatGPT alone reaches hundreds of millions of people. If that demand is real and durable, the circle isn't an illusion. It's just how you build fast. The counter-argument is a ghost from the last great tech boom. In the late 1990s, telecom equipment makers like Lucent and Nortel didn't just sell gear. They lent their customers the money to buy it. For a while, it looked like booming demand. Then the customers couldn't pay, the loans went bad, and the vendors collapsed alongside them. It was called vendor financing, and it turned a slowdown into a crash. The shape of today's AI deals, sellers financing buyers to buy from sellers, is unmistakably familiar. History doesn't repeat, but it does tend to rhyme. So which is it? Virtuous circle or dangerous illusion? The uncomfortable answer is that both can be true at the same time. The demand for AI is real. The financing that's funding it is circular. The loop keeps spinning as long as two things keep flowing: money and belief. Remove either, and a self-reinforcing engine becomes a self-reinforcing collapse. That's why the smartest people in the room aren't watching the announcements, the trillion-dollar headlines. They're watching the cash. Who actually earns it? Who only promises it? And whether the same dollar is being counted more than once. So here's what to hold on to. 1. OpenAI has committed over $1 trillion against roughly $13 billion in revenue. The gap, not the deals, is the real story. 2. When a seller funds its own buyer, apparent demand can be inflated, so always ask whether a dollar is new money or recycled. 3. Bain estimates the industry needs $2 trillion in annual revenue by 2030 and may fall $800 billion short. That gap gets filled by growth, by debt, or by pain. And 4. This is neither a certain fraud nor a sure thing. It's a leveraged bet on belief. If this made the AI economy click, subscribe. We follow the money every week. And tell me, virtuous circle or house of cards?